Yeah, I'm losing my
Yield curve
edge.
is finally here, Pete. And this is something that people maybe didn't ask for necessarily or aren't the most excited about. Everybody's still talking about marijuana stocks and cryptocurrencies, but I genuinely, I'm not being hyperbolic or trying to sell anything here or anything like that. I genuinely think this will be a really cool trade in the coming weeks and months as people jump on board and see just how easy it is to trade these yields and how much they move. Like, this is a really intriguing trade, especially right now. There's a lot of back and forth between traders and the Federal Reserve. There's a lot of cool pieces to this yield trade, Pete. And now you get three pieces of that yield trade from the small exchange. This is, I really think, as people start to learn about flatteners and steepeners and what the difference is between the 2-year and the 30-year when you're trading interest rates, I really think this is going to be a fun trade.
Couldn't agree with you more because it's simplified. You've actually added and we always say this without putting too much overemphasis on it. Interest rate, I mean, the cost of money, which is really what an interest rate is, just the cost of borrowing or loaning money, is the most probably overall the most important factor in making any type of business decision. Now, I know we don't think about it every single day. Am I going to fill my car up with gas? What's the financing cost of that? Or whatever. But it truly is probably the greatest driver. So to not have the ability to trade in that world of interest rates, which is just a representation of the cost of money, we're missing a piece. So here is the time when you can actually empower yourself and add that piece. And we're doing something, Frankie, and I did a show segment this weekend where if I can explain to you in 3 sentences what the yield curve is, it's simple enough to trade. If not, we haven't done our job while building product. And this is really all you're doing is trading yield 3 different points in time. And it's as simple as that, and 3 different opportunities.
Absolutely. And it's fun because there's a lot of different like Pete just gave kind of the historical take for it, is like, you personally, these interest rates affect your life, and it should maybe be something that you have your hand in if you're an active investor or a self-directed trader or what have you. But also there's just a ton of different angles, especially here in 2021. I brought in that Fed piece. There's so many people, Pete, from the time that I started trading, from the time that you started trading, everybody has an opinion. Oh, the Federal Reserve, they're idiots. Or, I can't believe that this, politician said this, or, the US Treasury said this, or whatever. Now you can super easily go and trade that opinion. Like, because those opinions and everything, it was like something that you talk about over drinks during happy hour after trading. After all the trading hours, all the trading was done for the week. And now it's so simple to be like, these the Fed are idiots. These rates need to go higher in the short term, blah, blah, blah. We got a product for you right here, Pete, and S2Y. Like, it's going to be a lot of fun. And I think that people maybe think of bonds and interest rates as not being too controversial or intriguing. But I mean, even there's, I'm sure, a bunch of articles and research being done on what a rising rate environment means for companies like Tesla, which people want to talk about every single day. And so there's so many different angles on how this piece interacts in the whole ecosystem of financial markets. And now you can trade it super easily and super small. We'll talk about the different opportunities that the 2-year poses, Pete, relative to the 10-year and the 30-year, those other pieces on the small yield curve, those other durations, Pete. But at the very, highest level here, like the broadest viewpoint, this is just a really freaking small product that lets you test out trading interest rates in something that costs $50 in margin, moves about $15 per day. And that's even, I think, on like the higher end of days. This is a $110 product, Pete. And it's something that is super new to futures, super new to interest rates as a whole sector. When you rope in ETFs and futures there, you'd be hard pressed to find a product this small and this easy to try out.
No, and I think you summed it up perfectly, Frankie, is to be able, there's a lot of lifts in trading institutionally sized futures. The size, the movement, the complexity. Now, here is a simple way. Initial margin, you're saying, in terms of $50 to be able to trade something that trades $15 a day. You think about so many of our trades we put together, we always look at It's not a sole determinant, but it's a factor in decision making. We all have a finite amount of capital. How do we deploy that capital effectively, and how can we expect a return on that capital? Here is the opportunity to start to get invested in the world of futures, or vested in the world of futures at an incredibly attractive price point. It doesn't mean because it moves less, doesn't mean you're guaranteed to make money. We all know that's not the case.
Sure.
But what it does is give you the opportunity to learn, start to get comfortable, start to deploy strategies. And this week, I know we're going to spend a lot of time focusing on strategies with the interest rate environment. Within this interest rate environment, it is such an once in a while, Frankie, you and I throw the dart well, and the team throws it well, and we roll out product at the perfect time. And, we've had this discussion all of last year that, well, if the Fed says rates are going to be zero for the next 3 years, rates are going to be zero. What do I care? Mortgages are going to be low. Everything's going to be low. Well, we're seeing this year, 2021 is the year of, I really don't care what the Fed says, because the market is taking a different opinion. And this is what we love. You and I have traded the battles of the Bank of Japan against the market and watched the long-term loser in that one, the Bank of England, do the same thing. Now we're going to that same battle shaping up. And what that means is there's a tremendous amount of opportunity and elasticity that comes in the marketplace. This sets up perfectly for us.
Yeah, absolutely. All of those reasons, and the size definitely lets you try out. Get into that battle without having to risk, your whole account with some of these. ZT down there. First of all, I don't know what 110.16 means in terms of that yield right there with the S2Y. $1.10 means 0.11% yield. The ZT price, the traditional futures for the 2-year. Very hard to understand and get any kind of get anything out of it.
I know.
Honestly,
I'm laughing
and
because
that's a $220,000 product too, right, Pete?
Yes, and I'm laughing because they fractionalized the ticks again. I don't know if it's like 1/256 or some pervert. I took it off my screen because the quote's so confusing. I don't even want to look at it anymore. So you know what the ability just to look at that yield and trade that yield in terms of basis points just makes it so much easier. And you know what? Right now, the 2-year, and we talked about this, $15 range, 15 ticks. Well, that's not a lot. We're getting $70 to $80 in the precious metals index in SPRI. Sure. But right now, this short end, the short duration of the yield curve is still pegging itself to the zero rate environment. We'll see if the glue lasts. It's changing at the back end. This will really be when this leg starts to become a little unglued. And you know what? Rarely do we get to trade 3 correlated products, which is the same underlying. U.S. Treasuries, just different points in time. So they're very correlated. It's the same underlying. The only difference is when it matures. One has and I'm sure you're going to hit on this. The one is net down on the year. One is up on the year. And I'm sure you're probably going to cover this, but it's amazing to look at the dichotomy and the divergence in a pairs trade when we talk about taking advantage of opportunity. This is it.
Yeah, and this is why we added, we had that small 10-year that was launched about 2 months ago, Pete. And this is why we added a short-term yield curve product and a long-term one, which we'll get to here in a second. Because, you might have been hearing about the fact that, interest rates are up. And we've been talking about how the 10-year product is up, 30, 40% in the last couple of months here. This 2-year is actually down on the year. Right. And this is the battle that we're talking about. And this is what's going to create a very distinct and intriguing trade between this 2-year and the 10-year and the 30-year, all on their own. But then also when you put them together in pairs trades that we'll get into later in the week. But you see here, this is the struggle against that Fed, because the Fed holds those short-term rates. That's what they have influence over. So when we give you this short-term interest product, it looks a lot different than, if I skip ahead here, the 10-year, which in the same frame of time here is up considerably. You've got this 2-year that is moving closer to 0%. Now, today we're getting actually a little bit of bounce in this 2-year rate. And dare I say a little bit of flattening in the curve. If you don't know what that means, just hang out this week, because we'll talk about flattening and steepening and everything on down the line. But this is a really different trade relative to the 10-year or the 30-year. A lot of people go to TLT or ZB immediately. That's 30 years of duration. This 2 years of duration, very different trade, and also a very, I think this is going to be an interesting one in the months going forward, because the 10-year has gotten a lot of the play recently.
Right.
As you can see it here, almost 50% higher in the last 3 months. This market, I think, has been coiling for a little bit, and we're going to see either a breakout to the upside or downside. I would put my money on that upside, but that's just my specific opinion. We'll see where this market goes. It'll be a really, really interesting trade here in the 2-year, right, Pete?
Absolutely. I think, as you mentioned, the rarely do we see that kind of net down on the year net, and by the percentages too, that the 10-year is up on the year. We talk about big movers, things we like to focus on. This is the opportunity where something that short of, something with a crypto attached to it, this has been the high flyer in terms of percentage movement throughout the year. You can't look for a better opportunity than that. So these curve trades, your bread and butter when you started your trading career was made right here. But you basically were like a fighter pilot strapping on a pressure suit, everything else. I mean, you really had to go to war every day with a ton of stuff just to decipher the noise. Here you can put 3 products up on your screen. You can do the math in a second. Every tick's the same, and that's where the average. All you need is he's to get out of what we were joking about that line. What is it? Get out of your car, get in, whatever it was. All you need these to do is get out of the box, and they're starting to get out of the box, which means move. And this is what we want. So this is going to be a great week in terms of, guys, as Frank mentioned, you're going to hear a couple of terms like steepeners and flatteners. You know what an iron condor is. You know what a butterfly is. You know what a jade lizard is. It didn't take you that much lift to learn it. You know what? Steepeners and flatteners, you're going to walk away, and that's it.
Yeah, and it's funny.
No other math
because
needed.
Well, and those are trades that'll be around forever. Like that. Like this is a trade that was around from before I was even born. I traded it right out of college, and now that professional trade has gone away a little bit, just because these markets have gotten so efficient and they've gotten so many different hands in them, and we're just doing that with more products with this S10Y. But it's really interesting, Pete, that you've got a product here that's so simple as the fact that $1 is 0.1% in that yield, because you go to try to trade what the Fed is talking about. You look at Fed funds futures. Oh, not a lot of people are trading those. You look at the 2-year futures in there. What the heck does this $110 with the, like you said, I think they're down to 1/8 of a 32nd there in terms of the fractions of the ticks there. It's very confusing. This product right here, if you buy $1, you just want this rate to go higher than 0.1%, which would correlate to that Fed lifting rates off of zero. Very simple trade there. It'll be a lot of fun. A lot of people who already have been trading small exchange products know about this one. S10Y. Now, this is probably the most flexible piece, Pete, and it's really created an interesting yield curve trade. I even want to get to the point this week where we're talking about butterfly spreads after we get past just your basic steepener and your basic flattener. I want to put together a single trade that has all 3 pieces roped in. And this is always, you refer to it as the anchor leg. This is the belly of the curve. Right. Whatever name you want to give to it, this 10-year, Pete, is kind of the leading rate benchmark. It's the first place that people go to when people are saying, oh, rates are getting killed today. The 10-year is probably getting hit the hardest. And when people are saying, oh, a lot of upside being seen in interest rates, this 10-year is, as you can see here, usually seeing the biggest upside in those times. And so this is usually when you're spreading stuff off, this piece is always in there. It's the most popular piece. It's the one that we started with. S10Y has been trading for a little bit. But yeah, this is going to be continue. It's already become an interesting piece. It'll continue to do so. Because yeah, you did a presentation this weekend, Pete, comparing the fact that in 2020, this market has outpaced, crude oil, has outpaced corn, everything that's not pretty much Bitcoin. It has outpaced, and not a lot of people talking about it quite yet.
Not yet, but that's what we're here for. We're here to change. You know what? We're here to change the discussion and empower the trader or the individual trader. And you know what? These products go a long way towards that. This is going to be it's going to be a great run. And to have 3 simple products that all live in the same world, live in the same quoting. You know what? It's funny. You and I both combine our experience. It's a lot. But when we've got to walk through in our mind, 1/8 of 1/32 is a quote. I mean, even for me, it's like, I don't even want to look at these anymore. They're too confusing. So, you know what? Let's make it simple. Let's make it small. $50 gives you something that is day traded at 12 and a half bucks for firms offering you day traded margin. To get involved in a future that trades 12 and a half dollars a day with a $15 expected range, I don't think there's a better way to set the table and open the door to the world of futures for that larger audience.
Yeah, absolutely. And this is the other piece that we just added this week, and the longest duration. Usually, the piece that people go to first, it's that classic or long bond, the 30-year. But this is also usually we try to divert people away from this because the traditional future ZB is so big, and it moves between $1,000 $2,000 a day. This one right here, Pete, just moves about $50 per day. The margin is only $300.
Right.
And you can see it moves comparatively, it moves more than this 10-year or this 2-year, you'll notice, and the margin is higher than those, but it's still manageable. And what's really nice is going across the curve, S2Y, S10Y, and S30Y, Pete, they all have this similar Y axis. They're all priced in that yield. And so I can easily say, oh, $20 in S30Y, that's 2%. Oh, $13 in S10Y, that's 1.3%. Oh, $1 in S2Y, that's 0.1%.
Right.
So easy to grasp all those things without those fractions of a fractional point, or without those large sizes, the multiplier being so big, being $1,000 for the ZB and ZN, then being $2,000 for the ZT. A lot of confusion there. All these markets price the same across the whole yield curve, giving you extremely easy access to short-term and long-term interest rates.